Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 12th of December 2019, and earlier this morning we published our YouTube podcast video entitled Fed Holds Rates and Predicts No Change for 2020, which followed on from our previous day's video entitled Fed Interest Rate Announcement Today. Now, in case you haven't had an opportunity to listen to them, we placed them in the description box below and seriously suggest that you hopefully listen to the Fed Holds Rates and Predicts No Change for 2020 as we go into some depth as to how we see both the prices of gold and silver panning out at the dollar and equity markets and what criteria are likely to affect them. Now, today is the turn of the ECB, the European Central Bank, under the new leadership of the former IMF head, Christine Lagarde. Now, interestingly, this morning, the euro strengthened against a weaker dollar as the short-term result of Jerome Powell's comments regarding interest rates into 2020. However, and as we predicted, this reversed slightly. First thing, the dollar index stood at 97.15, but it now stands at 97.31. Gold was, at 10 a.m., 1473 and silver 1685. They rose then to 1486, up $13, and silver, quite respectfully, to 1712, so that was 27 cents up, and now have fallen back again this afternoon at 3:30 GMT while we're producing this to 1466 and 1682. So what happened? Well, firstly, everyone without an economics degree expected the US dollar to fall, and frankly, we simply don't know why. Because regardless what the naysayers tell you, it's still the strongest currency of a bad bunch. And as its value is calculated in comparative terms, unless we were going to see the ECB raise rates, to us at least it was clear that this would be self-correcting, as there was no way the ECB is going to raise rates. Now, the ECB has decided today to, like the Fed, leave rates unchanged and to maintain its existing bond buying program. This was no surprise to those of us who follow it closely. With European deposit rates already at minus 0.5%, the main refinancing operations rate at 0%, and the marginal lending rate at 0.25%, these are the three key rates within the European community, there is little wonder that Christine Lagarde wants to tamper with these even lower until the last rate cut fully feeds through to the economy. In other words, she doesn't want to tamper with these until the last rate cut fully feeds through to the economy. Now, Klaus Visto, the chief Eurozone economist at Pantheon Macroeconomics, sums it up very well with the following words, quote, "The ECB is now operating under a state contingent forward guidance on rates and QE, indicating that rates will remain negative and that QE will continue until the central bank is able to convincingly forecast underlying inflation is reaching its 2% target. Needless to say, this will take some time," unquote. We agree with him. So, before we write off the US dollar, we already have the Eurozone in negative rate territory. Now, we'll talk about sterling in a second, but why? Why would we talk down the US dollar when, quite frankly, it's holding up extraordinarily well? And regardless of how you think your government works out its economic figures, bear in mind every government dabbles with their figures, all of them, whether it be China, the UK, the Eurozone, and so on. So that is why it's the trend that is so crucial to take notice of, because they set these parameters initially in stone, certainly for a period of time, and the secret is to look how they compare month on month on month. Then, when it works against the central planners, they then decide to change what composes the basket of goods or the calculations that they originally set out. But until those changes take place, you can gain an awful lot from the trend. So we are aware some people just say, oh, the government makes the figures up. Well, civil servants are the ones collating the figures. The politicians are announcing them, or the heads of the various departments announce them. They're not generally making them up. What is made up, technically, if you want to call it that, is, of course, how it's calculated. Now, as we've said repeatedly, watch the trend. The trend is arguably more important than the actual figures themselves. Now, we have to wait for the UK general election result to see how sterling now compares to the dollar. But at present, with the polls predicting a Tory majority, though reduced from 2 weeks ago, it is trading at $1.31 to the pound. This is up from where it was only a few months ago, where the fear was it was going to fall below 120. And it's a little bit lower than people had forecast that it would go, which would be around 135, which is still possible if the Tories have a very large majority. But as our discussion with Greg yesterday showed, the predictions at the moment and our assessment is that maybe the Tories will have something from a 20 to 40 seat majority, which isn't quite enough to push the pound through the roof, as it were, but it will perhaps strengthen beyond 131. Of course, if we're all surprised and the Conservative Party does badly, then we will see sterling potentially sink. So this rate of 131 in either direction is likely to change after today's result. We should know more by tomorrow morning. Now, equity markets are on a tear as we speak. Just briefly looking, we can see that the Dow Jones is up 263 points at 28,174. Did we not say just the other day it will go back up above the 28,000 and reach another all-time high? The S&P index is up 31 as we speak. That's 3,172. And the Nasdaq is up 83 at 8,738, all now new all-time highs. Why has this happened? Because President Trump has mooted today that he is close to closing a deal with China. And as we stated this morning, yesterday, and numerous previous video podcasts, the largest impact on gold and silver for the remainder of this year will be the decision on China. Remember, we have the deadline date of the 15th of December when new tariffs or additional tariffs or increased tariffs are due to take effect. And we have said we thought there would be a result tomorrow. It might even happen today, who knows? But we still think if there is an announcement, it will be made tomorrow. Now, if a deal is struck, if it happens, we can expect further downward movement on precious metals. Rest assured of that. And continuing all-time highs in stocks, certainly towards the end of the year. Now, we all know that won't last forever. However, if a deal isn't struck, or is delayed, or Trump falls out with the Chinese negotiators, then all bets are off, markets will fall, and gold and silver prices will rise. So the question we have to ask ourselves is, in view of the pressure President Trump is under vis-a-vis the impeachment inquiry, which we all know he will be impeached, but the Senate will not convict. We know that result already, regardless of the merits or demerits of the case. We're not casting any view on that, but we know what the outcome is going to be. So there is pressure, but it's more publicity related rather than actual what is going to happen to the president. So the question is, does he feel that now is a good time to do a deal? The NAFTA replacement has been announced. It's not implemented yet, but it was announced yesterday, which is good news. The economy is running well, relatively speaking, and perhaps the phase 1 of a China deal, or the prevention of the increase in tariffs on the 15th of December could be the third bit of good news the President is looking for. Meanwhile, please stay tuned to this channel and we shall alert you as soon as we get the information ourselves. Thank you so much for listening. Please share your thoughts. If you haven't already done so, kindly subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.